Welcome to Trading an Edge, the deep dive, where we break down the psychology, mindset, and system of elite trading. Today, we're tackling something that, well, it might feel a bit backwards at first, especially, in this world that's always yelling, go, go, go. We're challenging that whole idea that more trading, more action automatically means more success. Actually, our deep dive today is going to show why, maybe surprisingly, the most powerful move a trader can make is often, well, doing nothing. We've really dug into a lot for this research, trader logs, behavioral stuff, and what we found points to a pretty disruptive truth, I think. It kind of goes against that image of the trader who's always plugged in, always making moves. See, the market doesn't actually pay you for the hours you spend staring at charts. It pays you for your patience. Your biggest hurdle, honestly. It isn't finding some opportunity, it's waiting. Waiting for the right one that fits your specific edge.
That's absolutely spot on. The day-to-day reality of profitable trading. It's worlds apart from the action movie version you often see. It's not really about nonstop trades or those nail-biting entries or hitting home runs every single day. Not sustainable anyway. Truthfully, trading at a high level is deeply about discipline, about patience, and about mastering that quiet, powerful skill of doing nothing. What our sources really highlight is that most of the time, the market just isn't offering a clear, high-probability setup that fits your specific strategy. And in those moments, the absolute best, most disciplined thing you can do, just wait.
Okay, great. Let's really unpack that. What does it actually mean to not be constantly active? Especially when the market's always moving, always flashing something that looks like a chance, 24/7. I can almost hear people thinking, but if I sit out, aren't I just missing profit?
Yeah, that's a really common fear, and totally understandable. But the research gives us a strong counterargument. The core idea, kind of a clinical insight into market behavior, is that most of what you see flashing on the screen, honestly, it's noise. We're talking about those little ups and downs, the random wiggles that don't really give you a statistical edge for your specific system. They're just, well, the market doing its thing, breathing, you could say. Now, those true high-probability opportunities, the ones that perfectly match your system's precise rules, maybe a specific pattern you've tested like crazy, or a set of indicators lining up just right, those are actually pretty rare. So the really successful traders, they don't chase every little flicker, all that noise. They wait. Their real advantage isn't some magic prediction ability. It's their absolute commitment to a systematic, disciplined process. It means understanding that the only opportunities worth your capital are the ones defined strictly by your system. Everything else, that's just chasing randomness. Feels busy, sure, but rarely leads to consistent gains.
This is where it gets really interesting, and it's a theme that kept coming up in our research. Think about trading like this. You want to be a sniper, not a machine gunner.
Right.
The machine gunner, right? They're just spraying bullets everywhere, lots of noise, lots of action, but they burn through ammo and usually don't hit anything important. It's all quantity, very little quality, reacting constantly.
Exactly. It's a perfect contrast. Because the sniper, they're all about patience, deep patience. They might lie still for hours, maybe even days, observing, waiting, all for that one single perfect opportunity. They're defined by precision, by calm execution, and they absolutely refuse to take a shot unless the conditions are perfect according to their plan.
Precisely.
Yeah.
So the market, that's your landscape. It's vast, complex. Your system, those rules you've tested and proven, that's your crosshairs. You have to stay disciplined. Only pull the trigger when everything lines up perfectly. It's like a strategic withdrawal from the constant need to do something. Actually, there was this one study we looked at analyzing trading data. It found something pretty surprising. Traders who deliberately cut their trade frequency just by about 20%, they saw, on average, a 12% increase in their net profit. And not because they suddenly got better at picking winners, it was mostly because they paid less in commissions, had less slippage, and their entries and exits were just more precise because they weren't rushing. Less was definitely more.
That analogy, the sniper versus machine gunner, and that data point, they really drive home a critical point. Your consistency as a trader, it isn't about how many trades you make. Not at all. It's measured by your skill in patiently waiting for those truly high-quality setups. And then crucially, having the discipline to execute them flawlessly when they do show up. You're not getting paid for screen time. You get paid for the quality of your decisions, paid for the patience to wait for your edge, and the discipline to let it play out. It demands a real shift in thinking, from just being busy to being truly effective.
Okay, so if it's not about constant action, not about chasing every blip, what does this mean psychologically? Because let's be honest, for a lot of us, that feeling of doing nothing, of sitting on your hands, it feels wrong. It feels like you're falling behind, like the market's leaving you in the dust. How do you fight that really deep urge to just jump in?
That right there, that's the core battle. And it's what makes this so fascinating from a psychological angle. Our sources really dig into this. See, inactivity. It isn't just a lack of action, it's actually a deliberate, powerful choice. That nagging feeling, that FOMO fear of missing out the sense the market's moving without you, that's a really strong emotional trap. It's practically designed to make you act impulsively, to make you trade just because you feel you should be doing something, maybe because everyone else seems to be making money. I remember reading this journal entry from a really successful trader we studied. He called it the fear of being excluded from the profit party. But here's the key. When you learn to consciously detach from that pressure, when you actively decide that willing is the right move right now, you disconnect your ego from that constant need for engagement, and that gives you an incredible sense of control. Not over the market, of course you can't control that, but control over yourself, over your own process. So this waiting period, it's not weakness, it's not laziness or indecision, it's a conscious, active, strategic decision.
It's what separates the pros from the amateurs, really. Often the hardest work a trader does isn't the analysis. It's managing that discomfort of inactivity. It's fighting off boredom, resisting that urge to just do something, and conquering the fear that opportunities are passing you by. It's a mental game, often won by simply choosing not to play until the conditions are right.
That's a really important distinction. Seeing inactivity as an active choice, that helps take the edge off that emotional pressure you mentioned. It really does sound like truly submitting to your system is the dividing line between professional trading and just guesswork. Or gambling, even. It's clearly more than just logic. It's a deep psychological commitment, detaching from all those outside pressures and internal voices screaming, act now. But okay, how do we actually do that? How do we build that muscle of patience, of self-control? What are the practical steps someone listening can take?
Excellent question. And yes, our deep dive points towards a very clear, actionable framework, a kind of step-by-step guide to truly submitting to your system. And it starts with fundamentally changing how you even think about being inactive. Step 1. You have to embrace the discomfort of inactivity. Really lean into it. You need to recognize that feeling bored, that itch to trade, it's normal. Expect it even. It does not mean you're failing or missing out. You have to actively reframe it. See inactivity as a proactive, smart move. It protects your capital. It saves your mental energy. Sitting on your hands isn't lazy. It's defense. It's a strategic pause. I heard one veteran trader call it active non-participation. I think that captures the mindset perfectly.
Active non-participation, I like that.
Okay.
So it's about shifting your perspective on what doing nothing really signifies. It's strategic, it protects resources.
Powerful reframing, precisely, which leads straight into step 2. Define and honor a no-trade day. Based purely on your system's rules, you have to consciously decide up front, a day without a valid setup, that is a successful day. Why? Because it's a successful day of capital preservation. If your system's conditions aren't met like precisely met, then doing nothing isn't just an option. It's the only logical systematic action. No gray areas. This isn't about hoping a trade appears. It's about respecting the rules you set for yourself. A successful no-trade day means you kept your money safe, stuck to your discipline, and didn't form bad habits. That's a win, period.
Yeah, I really like that framing. A successful day of capital preservation. It turns what might feel like a lost day into a victory for consistency. But okay, what do you do with that time then? If you're not trading, that's when the boredom can really creep in, right?
Right, and that's exactly why step 3 is create a productive waiting ritual. When you're in that waiting zone, you need a plan. Don't just sit there staring at the charts that's basically inviting boredom and bad decisions. Use the time constructively. And this isn't just busy work. It's about making your inactive time valuable for your trading growth. What could that look like? Well, maybe you meticulously review your past trades. Look for patterns and mistakes, or what worked well. Or maybe you spend time studying market structure more deeply, refining your understanding of price action, maybe looking into risk management techniques. Some traders actually find it best to just step away completely. Go for a walk, read a book, do something totally different to mentally recharge. The point is, this conscious effort turns passive waiting into productive patience. It means you're always improving, even when the market isn't giving you trades.
So turning downtime into growth time, making sure you're always sharpening the saw even when the market's quiet, that seems absolutely vital for long-term mental resilience.
Exactly right. And the next step. This might be the most critical one for actually executing consistently. Step 4. Let your system dictate timing. Your plan. The system you've carefully built and tested. That is the only thing that decides when you enter a trade. The sole authority, your feelings, your impatience, your desire to be in the action. They get 0 votes. None. Whether a quality setup takes an hour, a day, or even a week to finally appear, your decision to act comes only when your system's criteria are fully met. This takes the emotion completely out of timing your entries. It ensures your actions are systematic, logical, every single time. It's about trusting the blueprint. There was another study showing traders who relied on objective system signals for like 90% or more of their entries. They had much lower ups and downs in their monthly results, more consistency.
That brings us right back to the sniper, doesn't it? The sniper doesn't decide when the target shows up. They just wait for it to enter the crosshairs. They don't force the shot.
Exactly. And that leads to the final step, step 5. Prioritize quality over quantity. This is really a fundamental shift in how you measure your own trading success. Stop grading yourself based on how many trades you took. That's irrelevant. Instead, focus entirely on the excellence of your decisions. You get paid for making the right decisions. That includes waiting patiently when your system says wait. It includes following your plan diligently, even when it feels boring or uncomfortable, or when your gut is screaming, do something. Yeah. This totally redefines what success looks like day to day in trading. It's not about the quantity of trades, it's about the quality of trades you take, and maybe even more importantly, the quantity of bad trades you avoid through discipline and patience.
So it sounds like consistency really does emerge naturally from these kinds of disciplined actions. It's not something you chase directly or try to force. It's just the result, the byproduct of a disciplined process. It's understanding that sometimes the most profitable action you can take is actually no action at all. Recognizing that protecting capital, preserving mental energy by waiting patiently for the high probability moments, that is active profit generation in a way.
And that brings up a really important question for you listening right now.
Yeah.
Your system, those rules, that plan you've maybe spent weeks or months developing, it's your blueprint for potential success. It tells you how to find and act on opportunities. But without the patience, without the discipline to actually wait for those conditions described in your blueprint, well, it's just a piece of paper, isn't it?
Yeah.
So the question becomes, are you content just holding the blueprint? Or are you ready to become a builder of real, consistent profitability?
Trading an edge where psychology meets profitability.